All right. Well, welcome everyone. Hopefully everyone can hear us. I'm very excited to launch our inaugural episode of I know we haven't figured out if it's bi-monthly or every 2 months or every 3 months or what we're doing, but it is a social enterprise and impact investing webinar. Somebody said weekly, make it weekly. So we're figuring it out, but we're very excited to launch this. This is what we're calling it today is impact investing in the DEI social enterprise ecosystem. I'll briefly introduce myself for those that don't know me. I will have Elisa introduce herself, and then we have a series of questions. A bit of housekeeping. I can see your questions, so if you guys have questions, you can put them in the chat to me, and along the way, I will intersperse your questions along with the ones that I have. We are running till 1:45. And so I'm very excited. So my name is Michael Pirron. I'm the founder of Impact Makers. We're an IT consulting company based in Richmond, Virginia. That's an all-profit to charity model social enterprise like Newman's Own. We're governed by a volunteer board. We're owned by 2 public charities, and we're kind of an all-profit to charity model over the life of the company. So we've given about $4 million away to local charitable organizations since we've started in pro bono consulting and cash. And so that's Impact Makers. Very excited. I've been involved in the social enterprise and B-Corp space since founding Impact Makers in 2006. Very excited to kick this off and have conversations with amazing folks like Elisa that you will find amazing, I'm sure, as well. For full disclosure, it's not all she does, but Elisa is on our board of directors at Impact Makers. So I thought it was a great person to add, but that is one small fraction, minute fraction of all of the things she does. And I think you'll be excited to hear from her. She has an amazing passion and energy, which will just shine as it always does from her. And to talk about her own technology company and her impact investing fund as well. So with that, someone said they have no sound. Hopefully hopefully others can hear. With that said, I will, hopefully everyone can hear. I will pass it to Elisa to introduce herself real quick.
Thank you so much, Michael. Very happy to be here. Proud to be a board member at Impact Makers. And I'll also introduce myself and a few of the hats I wear. So I'm Elisa Miller-Out. Welcome. I am an investor and a serial tech entrepreneur. I am the managing partner at Chloe Capital, which is a VC firm that invests with a gender and diversity lens. A few other hats I wear are as an entrepreneur in residence with Cornell University. I'm based here in Ithaca, New York. I also am a mentor with the National Science Foundation and their Innovation Corps programs. And I'm also an innovation advisor with New York State for the Energy Research and Development Authority, known as NYSERDA, where I also help advise on a portfolio of about $800 million that goes towards climate innovation programs and portfolio companies. So that's my quick intro, and I'm sure we're going to get to dive in on a lot of stuff more in the throughout this conversation.
Well, I'm very excited. I am seeing a number of people saying they can't hear. So Sean, if you can try to resolve that in the background for our inaugural session here, see if we can't get sound working or troubleshoot. Other people said they can hear fine, so it sounds like some can't. Sean, if you want to reach out to folks, I'd appreciate that. So with that, hopefully some can hear. I will go ahead and ask. So social enterprise is this term that people just don't fully understand. There's a lot of people maybe don't know the word social enterprise. What is it? And even if you ask someone who identifies as a social entrepreneur, there's different definitions for whoever answers that question. So I have my own definition, I'm sure, but I won't share that because I'm talking to you. I'd love for you to tell me can you define for you the term social enterprise and the term impact investing for those that don't know the term, and given that they're always different depending on who you ask. So what do you mean by social enterprise and impact investing?
Absolutely. So I think of a social enterprise as a for-profit business, but that makes a social or environmental impact. So something that is not quite on the nonprofit end of the spectrum and not fully on the for-profit end of the spectrum, but somewhere in the middle. Although many of them can make outsized profits that are actually better than a lot of companies that don't have that impact focus. So that's one of the benefits of impact. companies. So I will say on the impact investing side, folks look at this a few different ways. You'll hear a lot of terms in this space, right? Everything from ESG to SRI to impact investing. So just to break a few of those down really briefly here, ESG usually refers to looking at environmental, social, and governance factors that might impact the bottom line of an investment in some way, such as how some energy efficiency measures might impact supply chain costs, things like that. So some folks just focus on that kind of ESG investing. Other folks do something called SRI, socially responsible investing, which is often refers to screening things out. So sometimes you hear about these portfolios where folks are saying, okay, we're going to invest in everything except for tobacco, or everything except for, big oil or fossil fuels, right? And so a lot of portfolios just look at that. How do we screen out for negative things or things that we don't want to invest in for whatever reason? Impact investing, I would say, takes it that a step further in how I define it, which is that it's not just about negative screens, but more about positive impact. So looking at how investments positively affect the community, the environment, and look at that sort of positive impact overall. So that's kind of how I think of impact investing. It's not just about screening out the negative, but looking towards the positive.
If I have your definition right, it's not just divesting from the bad players. It's seeking out and to find and invest in the good players. Businesses making a difference in the world, not screening out the bad players like polluters or whatever you define as bad. Okay, thank you. So you ran a technology company, Singlebrook Technology, when I met you, and it was also a B Corp. So we're going to unpack that a little bit. But tell me a little bit about your first venture. Maybe that isn't your first, but tell me a little bit about when you started in the space. You were at Singlebrook Technology as a co-founder, and your decision to exit that, to take the exit and use that as seed money to start Chloe Capital.
Yeah, absolutely. Happy to share a little bit about that backstory. And yes, you're correct. I am a serial entrepreneur. So I've got 7 companies now that I've founded or co-founded. So Singlebrook and Chloe are 2 of those. Absolutely. Singlebrook is a software services company that focuses on custom web application development, working with everything from larger Fortune 500 clients all the way through to nonprofits, universities, startups, and then a lot of B Corps and for-profit social impact companies, right? As well. We focused a lot on this space of technology for change and technology for positive impact and good deeds in the world. So we did a lot of projects that focused on that, whether it was like doing a carbon calculator for the Sierra Club or working with the Environmental Defense Fund on some really cool projects. So it was things like that we got to do to be able to kind of make an impact in the climate and education and healthcare spaces in different ways. I ran that company for over 10 years. I was a co-founder of the company and also spun out some software product businesses during that time as well, and did a lot of mentoring of startup companies, and saw firsthand during that time how women and BIPOC founders were being overlooked and undervalued, right? Because I spent a lot of time networking across the sort of tech startup space for many years. I also realized during that time, that women were only getting about 2% of the venture capital in the space, and realized that at the same time, there was this tremendous opportunity because diverse teams were consistently getting a better return on investment. They were exiting earlier and generating more sales, right? So there was a lot of opportunities, and we saw this as an opportunity to make a financial return for investors while also making an impact in this space. So this is some of what led me to, on that journey to co-founding Chloe Capital alongside my amazing other leadership team, Kate and Erica and my Nico Ramirez. But yes, to sum up on Singlebrook, my husband does still run a division of the company. We sold off another larger division of the company to raise some capital, which then obviously went into, into founding Chloe Capital. And having that exit was a great way, I think, to make that transition over from the entrepreneurship space to the investing space, which was something that I had dreamed of for a while, but didn't fully realize until a little later in my life how important investing was as a real passion. And I think, I spend a lot of time as an entrepreneur, and now that I'm an investor, I realize that that's even more my calling than entrepreneurship was, which I love both, but investing is really my deepest passion, and it was exciting to get to be on this journey and discover that through this process.
Thank you. I think your story is inspiring to a lot of people. It's also very inspiring to me because you've gone through the path. For those that don't know, that impact makers will go through in our model. So for those that don't know, not that we have a plan for a liquidation event or a sale, but even if a partial sale or something happens where we sell some of the equity, we're owned by 2 public charities. And what happens in a future sale of impact makers is the proceeds go into this nonprofit wrapper to do impact investing to be like a foundation, except instead of investing in Wall Street, the funds are required by gifting agreement to invest in local socially responsible businesses with a preference to B Corps. And with the proceeds, then make charitable impact donations, right? So a foundation that's inside of an impact investing wrapper, inside of a nonprofit. But having been a technologist to have an exit to then do that, you've kind of laid that foundation, and we can learn a lot from you. So I'm excited. We're excited to have you on the board. And we're excited to talk to you, and it's just fun for me to to have this conversation anytime.
Yeah, I'm happy to continue to innovate on the model of what that looks like too with you, Michael, because I know that that's something I know that you've done with impact makers that I'm so excited about, is sort of innovating and creating this whole new model of how a company, can operate, right? And this radical model of being owned by these, nonprofit partners who get to benefit from all your work. So I'm excited to see what else you get to build on the investing side that also is sort of innovating around these models.
That's our future is the impact investing. But the other side of the coin of impact investing in social enterprise is the whole B Corp movement. So for those, if you don't mind, give me a second to just explain. For those that don't know the B Corp movement, for those who have joined, it's part of the social enterprise movement. It's focused on for-profit companies that are trying to do good in the world in some way. There is a certification standard called the B Corporation certification. Impact Makers was a founding certified B Corp along with about 50 companies. I think, were you a founder as well, or came in a year?
I was right after the founding, and then I was also one of the first for the benefit corporation structure.
And so you were one of the first in New York, I believe. We were the first benefit corporation in Virginia. Impact Makers actually put forward the benefit corporation law. So there was actually a law passed that allows through normal corporate law doesn't let companies pursue non-shareholder stakeholder value. How you treat employees, community environment, you must maximize profits for shareholders, period, in a normal corporate form. There's a new corporate structure in about 37 or 38 states out of 50. Virginia is one of them. Impact Makers help push that forward. It's companies that are allowed. A benefit corporation is a company that must take into consideration community environment, employees, other non-shareholder stakeholders when making operational decisions or liquidity event on a sale decision. And so we became one of the first benefit corps, as you did. You became a certified B Corp. Can you tell me a little bit about your decision to get involved in the B Corp social enterprise space at all with Singlebrook? And then why certify? Why become a B Corp? Why did you do it? It cost money. There was a fee. What was the value to you or to the business in doing so for those that might be considering B Corp?
Yeah, absolutely. Happy to talk a little bit about the B Corp journey. I think I'm such a fan and kind of early adopter of this model. So first, just to clarify too, so Singlebrook, yes, was a certified B Corp, one of the very early ones, not the very first, but within like a year after, B Corp was founded. And then likewise, we were, like what you did in Virginia, we were some of the folks who passed the legislation in New York State. So we were able to be, that cohort of the very first benefit corps in New York State as well for the legal structure. And I got introduced to the B Corp movement through another founder who was one of the founding B Corps as well, which was Jason Salfi. At the time, he was running Comet Skateboards, a really exciting impact company. Jason and I actually are still friends, and he is now running Dimensional Energy. So in addition to my board role at Impact Makers, I'm actually also on the board of Dimensional Energy, Jason's current company. So these relationships that are formed through this B Corp movement, they really last. I mean, I think this is all the way back from I think the B Corp movement was started around 2008, 2009, somewhere in that neighborhood. So this has been, going on over a decade ago since a lot of these relationships started. So in terms of what happened and why we decided that this resonated with us at Singlebrook, it was sort of a natural fit. We were really excited about the idea of doing business in a different way and of making an impact through our work in a more meaningful way. We were already doing that some through our work with these clients that were doing really impactful work in the space when we were working with some of these, social enterprise clients and nonprofits and organizations that were doing really impactful work in their communities. But when we saw this as an opportunity to just walk the walk and not just greenwash everything or just talk about what we were doing, but actually measure it, right? We were really excited about that opportunity. So we chose to basically measure our own company, measure all of our metrics. And through that process, we got all these great ideas about ways we could improve, because now we were benchmarking ourselves against other leaders and we could learn from their best practices. We could learn from the community. So we got a lot of better policies in place just through the process of going through the impact assessment. We were able to improve our governance, set up more impactful programs like volunteer hours that were paid, and doing things like open book finances, exploring a lot more ways of making our company more transparent. And then we also learned so much from the community. We were able to make these relationships that have lasted over a decade, right? With folks like you and Jason. And then finally, it was this great marketing opportunity for our business as well, because the B Corp seal is recognizable to many as differentiators of companies that are measuring what matters, right? And that are doing this work, as opposed to all the companies out there that might just say, in their marketing materials in a very empty way, that this is what they're doing. The companies like Impact Makers that are out there actually giving money to the nonprofits in their community and actually, owned by those nonprofits. It's a whole different model than a company that's just, slapping a statement on their website and calling it done, right? So we really like that model really appealed to us. And I feel like we gained a ton from that community, way more than what we put in our fees. We gained in terms of value from being part of that movement.
Yeah, I think when I talk to people about why become a B Corp or why did Impact Makers, we were doing what we were doing in Richmond, Virginia. At least it's a lot more activity now. It was not the hub of social enterprise, we should say, nationally or internationally. And so to become a part of a community, it's not like we were selling to other B Corps or any of that. None of our clients were B Corps. They usually weren't big enough for us to, have them as clients, but just to be connected and engaged and join a movement. So it's not just us doing what we're doing, but be part of like-minded people and organizations trying to make change, like the benefit corporation law, right? So I think that connection is important, and makes it really fun. We've had B Corp community events. I'm sure you've had in New York, but we've had some B Corp events that we're trying to kick off for those on the call. We've had as much as, 150 people show up at events live to talk about, various B Corp issues, et cetera. So this is the virtual version of starting that back. And for those on the call, we'll try to kick it off with other B Corps in the community and start doing the live events again. So I wanted to switch. I have a lot of esoteric questions to ask you, but I first want to set the foundation to give people an understanding of all of the work you do. And for those, if other people have questions, please go ahead and enter them in the chat. For folks who've joined, I'll try to intersperse them with my questions along the way. We have to 1:45. But if you could do me a favor and tell me a little bit about your work in, the current impact investing work at Chloe Capital, kind of what programs are you currently working on, and kind of what's your investment thesis, and why is diversity and inclusion so important to the mission of Chloe? So I'll just open-ended, but if focus on some of that.
Absolutely. So Chloe Capital is a movement-driven venture capital firm investing with a gender and diversity lens. What that means is we invest in companies that have at least one woman leader or someone who identifies as a woman in the C-suite. Typically, they have at least 20% equity or more at the seed stage when we're investing in the company. And they're a real leader, decision maker, typically the CEO, COO, CTO, CFO, a typical C-suite leader. We also target that at least over 50% of our portfolio will also have a BIPOC person in the founding team. That's a Black, Indigenous person of color in the founding team, and that is also someone in the C-suite leadership team, also with decision-making ability, typically more than 20% equity also on the team. So when we look at that gender and diversity lens, that's part of what we mean. Also, these companies tend to also benefit women and BIPOC communities in lots of other ways beyond just their identity as leaders, because often these companies that are run by these women and BIPOC founders do tend to also, make an impact in their communities in different ways. And they also solve problems, right, in unique and innovative ways that address solutions, such as looking at things. We do a lot of work in climate. So there's a lot of intersection in our work with the environmental justice and climate justice movements, for example. Some of the themes that we look at Chloe Capital are, we look at how do we solve the really big problems in the world, and how do we do that with more diverse voices at the table, solving those problems together and really innovating in solutions that will work better for all of us. So we look at the problems like climate, education, health, some of the huge things that impact all of us right now more than ever, and how are women and BIPOC founders innovating, but also innovating by driving better business results in these different areas. We also look at primarily technology companies, again, with my background like you, in impact makers and Singlebrook. My company was often building software for startups and for other companies. So my background is really in that software space. We do a lot of work in the software as a service, enterprise software as a service space as kind of a primary focus area for us. That's really our sweet spot. And then we invest at the seed through Series A stage all across the US, and we can invest about 30% of the fund globally as well. In terms of our programs and how we kind of have developed a unique model there, we developed something called the Invest in Women Tour, which is part of when we talk about this movement and talk about how we can impact women with much more than just writing a check. Although I won't lie, the check part is really important because access to capital is so critical for these founders that have these big visions and all this talent and potential, but often are not getting access to the same capital that their counterparts are. So beyond writing a check, what we do is we do these accelerator programs as part of the Invest in Women Tour. And it's a rapid virtual accelerator model followed by what is either an in-person or virtual 48-hour fundraising experience for women and BIPOC founders. We do these all across the country. We hope to do them all across the world at some point as well. We've done over 11 cohorts of our accelerator program so far, just in the last few years. And some of the programs that we've done recently, we do them with different themes and different partnerships. Some of the recent ones were something called Diversity in Climate Tech, which we did in partnership with NYSERDA and with Cornell University. We also did one called Women in Clean Tech that was in partnership with the Canadian Consulate. We also did one in Pittsburgh that was also called Invest in Women Pittsburgh, and that one was a partnership with the Richard King Mellon Foundation, as well as with Ascender, an incubator on the ground in Pittsburgh run by Nadili Nunez. So those are just a few of the programs we've been doing recently and how we've been kind of using this movement to both drive better access to capital for women founders, but also connect them with the resources, networks that they need to make an even bigger impact. So at Chloe, we're still writing, our checks, our sizes are anywhere from $100,000 to $250,000, which can move the needle, but we know these founders need so much more. But with our programs, we're able to raise an average of $2 million at the seed stage for each of these founders, and we're able to help them create about 10 jobs each. So with a cohort of 5, that means one program will typically generate about 10 million in funding for underrepresented founders, as well as create about 50 jobs.
That's amazing. You mentioned Pittsburgh. I hope you can see on your screen, as everyone can. I noticed this on LinkedIn from Chloe Capital a week or two ago. You were in Pittsburgh, so it was perfect because it was a great segue. You did want me to share a couple of resources. I thought I'd start with this. I don't know if you can say, this is an example of highlighting one of your portfolio companies or maybe one of the people at the event. If you want to just briefly explain that, and I'll share some of the other things you wanted to share as well, and we'll share your information as well if people want to reach out to you. We're not ending, but at least thought to get it out before people drop off if they have to.
Yeah, absolutely. No, this is wonderful. And absolutely. So this is Nehal Bojak, who was one of the participants in our accelerator program in Pittsburgh. We typically have a cohort of 5 companies that participate in each of these programs. And all of these founders get connected, not just with the Chloe Capital team. We've got about 25 folks on our team. We had about 9 members of our team there descend on Pittsburgh and interact with all of these founders. And then we also have them connect with a whole group of curated co-investors that we bring to the table. And in fact, that's what you see right here in this picture is a bunch of folks actually networking at our sort of speed networking with the curated introductions that we make to all these different other investors that we bring to the table for these companies. So we really are building this community of folks who invest with this gender and diversity lens and can help drive more capital together to these founders, because many of the funds like ours that are first-time funds by what's called, emerging managers in the space, many of the funds started by women and BIPOC founders are oftentimes these first-time smaller funds. So we often can't fund an entire round by ourselves like a big VC in Silicon Valley can, but we all really take this community approach and invest together with a lot of folks to help these companies succeed.
And this is your classes. I think these are the coursework that you have available to anybody.
Exactly. So yeah, we've launched this impact investing course here, which is a great resource for the folks on this webinar, because a lot of you are interested in this impact investing space. You can think of this course as like kind of a basic 101 course that really teaches you the basics of angel investing, of venture capital, and then specifically with this impact investing lens, what that looks like, right? And for us, with the focus on gender and diversity lens, which is one of our kind of primary impact lenses beyond our other themes like climate and education and health. So yeah, we're absolutely happy for folks. And I think Sean is going to put a link to our course in the chat at some point as well. So we'll be able to share that with folks too. And folks can take the course after this webinar.
I think here's the information for anyone who wants to reach out. Email as well as the website, and there's lots of information there. I just wanted to share all of that. So info@chloecapital.com and chloecapital.com. So I'll unshare that for the moment, and we'll continue. So thank you for that. I did want to kind of maybe ask you some a little bit more complex questions. So what do you view, I guess as an investor, even as an impact investor, you're still kind of part of, capitalism. Maybe not capitalism. Maybe it's stakeholder capitalism and not shareholder capitalism, but it's still we're within a capitalist free market system, and you're investing and trying to have an exit and scale. So the question is, right? And we'll ask a couple of questions around this. Can social enterprises successfully scale without sacrificing mission? What about the successful ones, for example, that have an exit to large corporate giants? And I say successful in quotes, such as, most people don't know, Honest Tea, which everyone sees, proud member of the Coca-Cola family now. Stonyfield Farms, organic yogurt, proud member of Dannon, right? It was sold to Dannon. 7th generation cleaning products, and even Ben & Jerry's. Social enterprises started as social enterprises. They're now owned by Unilever. And that list can go on and on. Tom's toothpaste, owned by one of the large ones, Burt's Bees, et cetera, et cetera. So, is scaling the impact, is this scaling the impact as intended, or is it a sellout by the founders, social entrepreneurs, to make cash, right? Is there a way to scale within mission? What's your thoughts on that? Since you're providing the capital to help people scale, is that a good thing or a bad thing for social enterprises?
Yeah, I think these are fantastic questions, and ones, we could talk about for a long time for sure. You're going to hear, answers on all different sides of this, right? There's folks who think that some of those big exits were total disasters for the company. There's other people who think it was really the best thing that could have happened all around. There's a lot of controversy, right, around, I would say, this topic, especially within the social enterprise business community. I tend to take a little optimistic view here in that, I like to hope that, yes, while there are some horror stories out there and there are some, investor founder and exit situations that get really ugly sometimes, it is my hope that most of these companies that get acquired can actually positively impact their parent companies and really drive larger corporate change, right? This, in a way, we could look at this as this is how we make this movement in social enterprise, which could be looked at as more of a fringe movement. This is part of how we make it more mainstream, right? Is by embedding these really innovative entrepreneurs within these larger institutions, where now they can become kind of an intrapreneur, right? And continue to hopefully innovate within that organization and push the parent company to drive some larger change corporate and encourage those bigger companies to reevaluate.
We've seen some of that, right? For folks who aren't into this conversation, I mentioned Dannon, for example. Stonyfield Farms was bought by Dannon, and everyone said, "Oh, okay, that's going to kill the social enterprise mission." In some ways, Stonyfield Farms has infected Dannon, and I think Dannon North America and one or two of the Dannon European entities have become certified B Corps.
They have, absolutely.
Unilever is being infected, in quotes, by Ben and Jerry's and seventh generation, and is considering B Corp status. So there is some, to your point, there is some proof out there in the market of what's unfolding with what you're saying. But there's also naysayers who say they're all sellouts. They got a big exit, just like any other large corporate, large takeover.
Yeah, no, absolutely. I think, these are great examples because, Dannon is one of those folks that have been very involved in the social enterprise movement, really redefining what does being a B Corp mean for a large multinational corporation, right? Because it is a whole different set of rules. And it's actually pushed the B Corp movement to have to make their standards, expand to figure out how do their standards apply to these large, global multinational companies, right? And how do we really push the envelope on all levels? So I think there's some exciting things that can happen, at scale, and some ways that change at scale can provide tremendous opportunities. It can also go in the other direction, obviously, as well, right? So there's a lot. There have to be leaders at all levels who really buy into this vision to make it work. And there's also, I want to point out that there's also all different ways to look at this question of scale, right? There's all these other alternatives models, like companies like Zingerman's that grew from just a deli to a $60 million business by creating all these different related companies to their deli, right? So then they found, they figured out ways to do also, a dairy and, a bakery and all these other things, where they started innovating around their supply chain for the deli by creating all these other companies in their network, all under one brand umbrella, right? Or there's also these cooperative models, which also can operate at tremendous scale, like the Evergreen Cooperatives in Cleveland, which is 5 companies with over 320 workers, or one of the biggest cooperatives in the world, Mondragon in Spain, with over 80,000 employees. So that's real scale there, but it's also this completely cooperative, worker-owned model. There's a lot of models out there. Jenny Kassan, who we both know through this, through the B Corp movement and through ASBN, is someone who wrote a great book called Raise Capital on Your Own Terms, that also really explores, what are all these different models out there of different ways to raise capital and start and structure your company, so that it's not just the typical venture capital model. And I will be transparent here that at Chloe Capital, we do have a more traditional venture capital model. And we did that very deliberately. It's because we knew that we were already, at the time when we founded the organization, that we were already really pushing the envelope here by dedicating this fund with this gender and diversity lens, right? There's starting to be more of us out there, but at the time when we founded Chloe, there really were only a handful still of folks that were doing that work. And we didn't want to create an entirely new investment structure because we felt like we wanted to ease some of the institutional investors into this model. And we were already sort of innovating in terms of our impact model. However, now that the gender and diversity lens space is becoming a little bit more widespread, thanks to early pioneers like us in the space and some of the other great pioneers in the space, we are now looking at how we can then innovate around the actual structure of venture capital and the structure of how the companies are run. And we actually just applied for a fellowship in this area to start looking into, more research in these alternate funding models, and different ways to drive that kind of change. And there have already been some great experiments in this with groups like Capital Access Lab that was founded by the Kaufman Foundation, and finding ways to look at other models like for instance, funding a company and then getting an exit through the company, through a multiple on the company revenue, rather than maybe an exit, to a larger company. There's all kinds of different ways you can sort of look at a different structure for these deals. And that is something we're very interested in innovating around.
How do you, to further that question, kind of 2 follow-up questions. How do you kind of ensure as an impact investor, right, whether it's you or others, how do you or others kind of ensure, right, that your investment strategy is actually creating larger impact and not, the sellouts that we talked about that are not successfully scaling, right? And are just so. How do you ensure that you're making investments to encourage continued impact through the social enterprise space, right?
Yeah, absolutely. Great question. Well, first is obviously in who we select as founders, right? And what drives them. It's also, in terms of that gender and diversity lens, we know that does help, because we know that women and BIPOC founders are by and large, there's a lot more overlap between women and BIPOC founders and these more impactful, community-focused kinds of companies. And there's actually great research on that. I literally was on a call just before this that had some great data, for instance, on gender and climate, for example, that if you're creating a completely fossil fuel free portfolio, it actually just organically, naturally will have, something like 60% women in the portfolio. So it's interesting that there's already data showing these overlaps, right, between climate and gender and race, and looking at these different ways in which there is a little more overlap in the impact space. So that happens somewhat organically for us, which is great, since we're investing in women and BIPOC founders. That said, we also do take other steps. We are actively promoting things like the B-Corp movement. While we don't currently force or require our founders to take the assessment, we do, certainly encourage it. We have a whole list of resources that we send to our founders when we make our investment, to kind of say, look, here are some great resources around DEI. Here are some great resources around impact. These are some different things you can do. And we kind of give them these toolkits to basically say, here, we're gonna give to you these resources. You can't say, hey, I didn't have these resources, or I didn't know where to start. We're gonna give you some places to start, right? So that we're embedding some of these practices into the companies from the start, and we're getting involved at a very early level. We're pretty hands-on as investors, so we're working with these companies, from their seed stage. So oftentimes they just have an early product in market and some early revenue, but they're still fairly early in their journeys. They oftentimes have, only a handful of team members when we invest in them. So there's this great opportunity in building the team and the culture, since we are coming in really early. So there are a lot of chances. Now, I will say that with our approach, we're still writing a small check to these companies. Again, that $100,000 to $250,000 range. It's not big enough to take a controlling stake at this time, or to become part of the, formal governance of the company. Typically, we're not like requiring that we take a board seat, things like that. That's really reserved for the bigger checks at this time, which means that we can't necessarily operate in a way where we're forcing the company to behave in a certain way, right? We're not that type of VC currently. Currently, but let's just due to the deal, both to our philosophy and also due to the economics of our deal. I mean, if we did get to a place where we're writing bigger checks and could influence the impact of the companies and use that influence in a positive way, we would, consider doing that, certainly.
So what would be,
but it's not part of our
makes
current
sense.
model.
So, but you do have an idea of what wild success would look like for your portfolio companies. And it's not just, as an impact investor, it's not just financial success, it's other success. So maybe you can just speak, and I have probably another question or two in here too, but maybe you could speak to what would be wild success for your portfolio companies in terms of impact, what that looks like, or maybe beyond just your portfolio companies, just in general in the social enterprise space. What do you see as models of wild success in the social enterprise space? What companies have you seen really be successful, and why are you citing those companies? What makes them successful? That's social enterprises. That's social enterprises.
Yeah, great questions. Well, first, just in terms of, to address that in a broad sense, and I'll address with a specific kind of story from our portfolio as well. So there is a on a broader sense, our vision of the world we want to create at Chloe Capital is really to have all these diverse voices at the table, innovating together, solving these big problems that we face, right? We talked about climate, education, health. We do feel that what we're doing, the work we're doing, and the impact we want to have is to create this better world for all of us. And I think we can only do that with, by starting with who's at the table, but then of course we have to look at, how do we drive change in these different areas, right? So in terms of realizing that vision in a real way, and also realizing this world in which we're building a community of folks who are all really raising each other up too, right? Like those founders that really give first and give to others and mentor others and raise them up, both women helping other women, as well as also what we call our man-ambassadors, really helping play their role in this movement to raise up all these women and BIPOC founders as well. And then to give a specific story from our portfolio, for example, there are founders like Elisa Miller-Out from COI Energy. Elisa was one of the participants in our Diversity and Climate Tech Accelerator program, and we also made an investment in her company. She's a Black female entrepreneur innovating in the climate space, which is definitely very driven right now by white men currently. And so we took what Elisa was doing with her company, which is it's an enterprise SaaS platform that helps with energy efficiency for buildings, but it also helps by giving back to disadvantaged communities. And Elisa is a founder herself who, when she was growing up, experienced energy insecurity and experienced a household where the lights were turned off because the electric bill, couldn't get paid, right? And so having gone through that experience, gone through those experiences growing up, for her, the folks who turned back on the lights at the electric company were really like her heroes growing up when that would happen. And so she went into a career in the energy industry and in the utility space, got incredible domain knowledge, went out there and then actually built a company that was solving real problems for businesses, driving incredible revenue, right? And becoming an incredible investment that's super successful for her investors and that's doing really well financially in terms of revenue, but also in the process giving back to those same disadvantaged communities and finding ways to increase access to energy for some of the folks who don't have it and can't afford it, right, in the process. So this is what I mean about founders who are, when we bring all these founders to the table, who have these perspectives, who have these unique lived experiences, how they solve these problems is unique and different and can both generate incredible capital and returns for investors, but can also really help solve the problem in a more holistic way that actually gives back to all the people who need it. So it's really, that's, I think in a nutshell, really gives a good example of what we're doing at Chloe Capital. There's really no trade-off in terms of impact and returns. We're doing both, and in fact, we're doing both better.
So how about in the wider ecosystem, like if you think of wildly successful social enterprises out there in the world? I mean, of course, other than impact makers, just kidding. I'm like wildly successful, changing the world, social enterprises that have truly been wild successes. Anything stand out and why for folks that might be on this that might want to explore some of the success stories out there?
Yeah, I mean, I think Ben and Jerry's is a great story. I mean, while obviously being also a story with a lot of complexity in terms of the different layers of what happened in their transition as they tried to maintain impact. But I think one of the reasons I point that one out as a good story in particular is because it was one of the really early companies that really did bring about this mixing of, really creating a successful business while also really living their values with things like the partnership with Grayston Bakery, which was providing, jobs for folks who were formerly incarcerated.
As a nonprofit social enterprise, for those that don't know.
Exactly, as a nonprofit social enterprise, exactly, to then bake these brownies that would, go into some of the most popular ice cream in the world, right? So incredible model, incredible impact, but also I think even both the ups and downs of their acquisition have created a lot of, I would say, learnings for the social impact community and have really, I would say, forced a conversation like the conversations we're having, these hard conversations around how do you scale impact, right? And how do you do this at scale? And I think having that case study, I guess, as an early example of, what some of what went right as well as some of what went wrong has been a really good learning experience for us in terms of how do we look at this space and how do we.
And for those that don't know, Jerry was part of the early B-Corp movement, part of ASBN and SVC. For full disclosure, it's public. Jerry of Ben & Jerry's is an investor in Impact Makers and has supported us over the years as advisor on and off. So thanks, Jerry, if you're watching. But with that, we are running out of time here. If anyone has any last questions, I'm sure Lisa would be happy to stay a minute or two more, but I wanted to make sure anyone else had a chance to ask a question. We did have one question that wasn't specifically for you, Elisa, but it was for the webinar. They said the webinar has been amazing. It was so excited to hear about the toolkit Chloe Capital provides to founders. Is there a link description of future sessions that that we're holding on this webinar? And the answer is absolutely not. This is our first pilot. We're going to get feedback and see how it went. And the idea is to do it at least quarterly. So we don't have a link or anything like that, but of description. But stay tuned. Look on. I don't know how you found it, but if you found it on LinkedIn or Facebook or various other avenues, look there. We'll probably post it on our Impact Makers LinkedIn and social media for the next one. But again, probably in the next 2 to 3 months. We'll try to do it at least once a quarter, if not twice a quarter, was the idea. And I appreciate you being part of it. It's always awesome to hear all the amazing things you're doing. You're just a bundle of amazing energy and passion in what you're doing. And it's a lot of fun to connect with you anytime. So thank you for your time today.
Likewise, Michael, it gives me great joy that being part of these movements, it's one of the great joys of it is getting to meet other amazing founders like you who are so inspiring. And you've helped me so much in my journey throughout Singlebrook and my time at Chloe Capital that I really appreciate any opportunities to, give back and be supportive of Impact Makers, both on the board and also, just in the larger community.
Well, thank you very much. If anyone has any questions, I'm happy to share my email. It's just Pirron, Michael Pirron, Pirron @impactmakers.com. We do have a mailing list for B Corps in the region. If you want to be added to the mailing list, it's kind of an opt-in versus opt-out, but you can also email me. That's it. It's on the screen. You should see it. You can email me and say you'd like to be added to our mailing list and then be notified of other webinars as well as other things. So thank you guys so much. Thank you so much. I will say in the background, I'm saying you guys because Sean McAndrew has also helped organize this for us, and I wanted to thank him for all his time and energy. You don't see him, but thanks so much, Sean, and for orchestrating it. And this was fun. So maybe we'll invite you back again.
Thanks so much, Michael.
So much. And there's some people on here that I'm going to be reaching out to be the next guest. So I saw a few.
Sounds good.
Thanks so much. And with that, we will wrap it up. Thanks, everyone.
Thanks, everyone. Bye.